save the constitution, and also to teach a lesson to a very arrogant BJP, because they had this entire the way this narrative was shaped, that there is nobody who can defeat the BJP. I think the way the PM went on with campaigning, the way he kept on trying to demonize the Congress, he kept on, trying to target the Congress without being able to give any kind of positive agenda for the country.
Sure, but Pankuri, can I ask you just a couple of things? You said that you're still hoping the numbers move in your favor. Now, best case scenario, Congress right now at 95. Best case scenario, even with more votes and leads, would be what, 4 or 5 seats more. How do you see, the claim that you will form the next government if the NDA has crossed the halfway mark comfortably? Yes, the BJP number is under the 272 mark, but the NDA by itself has crossed the halfway mark and is close to 300. So in that case, what would you have to do, or how could you really form the government?
Well, these are not the final results. The counting is still going on, and we are very confident that the picture is going to change and the BJP number is going to go down. We are very confident of that. And then, like this, they never say no. Never, you don't know what happens in politics. And we know a lot of, I think I'll not say much, but the picture is going to change. I think there are a lot of surprises that are out there for the BJP as well. They have taken people of India for granted. They have taken their allies for granted, and now the people have decided to give it back to them.
Okay, I should put that question to Gopal Krishna Agarwal. Let's get both of them in a two-window. Let me put that across to Gopal Krishna Agarwal of the BJP joining us today. Mr. Agarwal, thank you for speaking with us, and great to speak to you as well after a long time. But on a day which is, I'm sure, a bit of a disappointment for you, that the BJP has fallen short not only of its own goals set, 400 par for NDA now is seeming like really yesterday's story, but also of the 272 mark. What do you think has gone wrong?
I think still we have to wait and see the final outcome. But the best part at this point of time will be that the Congress, particularly Pankuri ji, agrees that the democracy is live and vibrant in the country, and they don't question our democratic institutions about their impartialities. And at the same time, they should also tell that why they were indulging in such narratives which are not conducive to the strong nation. Do they accept that India's GDP is growing at 8.2% and is an outlier across the globe, where every country, most of the countries post-COVID are finding it difficult and getting under recession? We are attracting highest FDI. The infrastructure construction is very good, and sectors like space technology, artificial intelligence, digital economy, they have performed exemplary in the last 10 years. So our economy is good. Our pride in the global eyes is very strong.
Gopal Krishna Agarwal, I agree with you. Our economy is strong. India's inherent strength is there. But can I please ask you the question which I asked you before? What do you think has gone wrong for the BJP? Because if I compare with 2019, at this time of the day, the picture was very clear. Even if you think that these are not the final numbers, would you agree that this is a closer fight than you expected?
This is a closer fight. There is no question that this is a closer fight, but it's still, we have to wait for the final outcome. But you see how Odisha we are performing, even Tamil Nadu, Andhra Pradesh. So the Congress have to answer more about South. They were talking about divisive forces, about North-South divide.
I'm glad you asked me about Andhra Pradesh. Because I want to ask you exactly this. Does Chandrababu Naidu... No, I'm asking about Andhra Pradesh and Bihar, because do Chandrababu Naidu and Nitish Kumar become very, very important right now to the BJP? They are important players in the NDA alliance, and unlike the 2019 result, the allies become crucial.
Surely, before going into this election, we went all out to expand the NDA fold. we have almost more than 30 allies.
Okay.
So it's a big party. We wanted that all people who are conducive and who work for the development of the country, who works toward a strong nation, who have a vision of strong nation. India is a strong nation. So they should come together in one umbrella, and it has been a very important step before the election also. And I want to quote here that Chandrababu Naidu himself is one of the most underrated chief minister the country had. He was a visionary. He had done great.
But he's been in political wilderness for 5 years. He's been in political wilderness for 5 years, and now this is his big comeback, one way or the other. Pankuri Pathak, just last question to you very quickly. If the numbers end up close to what we're seeing on the screen right now, there is a chance that some of the MPs on the India Alliance side will need to be shipped to resorts, you think?
Well, I think that can happen both ways.
Oh.
So I think we need to wait for the results, because the party that was until yesterday, they were claiming that they'll be getting more than 400 seats on Modi ji's face. Today, they have to depend on their allies to form a government. So BJP has been given a fitting reply for their arrogance and for basically taking the people of this country for granted. And we all know that the playing field was totally unequal in these elections. In spite of that, the kind of response that the public
Pankuri, you can't say that today.
Answered.
You can't say that today. The whole EVM story and election commission story.
I am not talking about EVM.
The fizz goes out of it.
We were seeing the no. Let me complete. The Congress was contesting against the richest party in the entire world.
Okay, we'll wrap it there. We'll wrap it there with Gopal Krishna Agarwal and Pankuri Pathak. But I want to take one view from Ashok Malik before we close this and we go back to our non-stop markets coverage. Ashok Malik, the role of regional leaders, whether it is, of course, like I said, Chandrababu Naidu, Nitish Kumar. Let's talk about Mamata Banerjee, who has held off and held her own in West Bengal today. They rise again back to very, I would say greater prominence in the national political stage?
Yeah, certainly. And if you look at policy making and legislation, to be honest with you, it will now have to go back to a much more layered negotiation in Parliament. Parliamentary committees, for instance, which had become less than optimally function in the past few years because of majority government, and this could happen with any majority government, BJP, Congress, whichever party. They will again become more important as platforms for negotiating legislation even before it is actually passed. We are looking at a more layered and more constructive mechanism of policy making, and I would say legislation shaping. Which in a sense is not a bad thing, because it means that legislations will be less contested once they are passed, and there will be a greater buy-in. Because I think all parties need to remember that there are still great strengths in the Indian economy, but these strengths can only kick in and only be optimized if, frankly, the union government and states work together, and if Parliament acts in unison. So, in that sense, I remain optimistic.
Could we expect Ashok Malik a policy move towards I don't want to say freebies, but more populist schemes because of the messaging or because of the response from, say, in Uttar Pradesh or Maharashtra, rural economy, etc., will be more in focus?
I don't want to jump to conclusions about the reasons for the setback in UP, if indeed is a setback as these numbers hold, because let's not jump to instant conclusions. And to be fair, freebies and populism has not been Mr. Modi's style, even when he's faced tough challenges. I think what this means is that the current welfare architecture certainly cannot be rolled back. No party will roll it back. So that had to become the baseline. We are looking at competitive elections in Maharashtra and Haryana later this year, where there will certainly be pressure from those parties seeking to capture power to resort to some of this populism. The NDA will have to respond. So yes, while that risk certainly is there, I think it also means the ruling party at the center, at the union government, will have to reach out to the opposition for a structured conversation. There is an opportunity for that. I hope that is not disregarded.
Right. Just last word from you, Amitabh Tiwari, on where are you seeing the BJP cede ground and where are you seeing them gain ground? Because remember, our conversations always were about there would be some attrition expected when you've hit your peak in certain states and seats, and then you make up from others. Do you think that's the balance that has gone a little off, where the attrition has come in, but they haven't made up as much ground as was expected?
Yeah, clearly the attrition has come in and from unexpected quarters like Uttar Pradesh, which is party's strong foot, and the Ram Mandir movement. I mean, it is the epicenter of the Ram Mandir inauguration and the movement. And also the gains which were expected to come in West Bengal is not happening. I think the gains only are coming largely from Odisha and Andhra Pradesh. And if you remove this 21 number of the TDP, then it becomes very clear that the alliance with the TDP could become the game changer in this election, because that is what is the difference between the simple majority and the actual tally of the NDA. We might be heading back to a coalition era, and as Ashokji has said, we will see more constructive discussions from all the regional parties and their role in the policy framing going forward.
That's the thing about Indian politics and Indian democracy, I would say. You can never take the Indian voter for granted for sure. You can never be sure of what is going to happen. And, everyone thought they'd seen the back of coalition politics, but that's what Amitabh Tiwari is saying, that we may be going back into that era after 10 years. Well, picture abhi baki hai. You're seeing the leads as of now. 6 rounds mostly done is what Amitabh informed us. In a lot of cases goes up to 22 rounds, but will we see a dramatically different number? Seems unlikely. On that note, very quick break, but we're coming back. Our non-stop coverage on here on NDTV Profit. Don't go away.
Independence starts where financial dependence ends. Women's Day might have passed, but the data compiled by a report named Women and Finance by Crystal and DBS calls for your attention. For the longest time, women have been underestimated and underrepresented in many spheres of life, whether that's at home or at work. But for a change, there is a change this time, and I'm going to show you some mood-lifting data. Did you know that 47% of women make financial decisions on their own, and their independence when it comes to making financial decisions depends on 3 things: income source, age, and stage of affluence. Income source. 55% self-employed women take financial decisions on their own versus 39% of salaried women. Does that mean salaried women are more hesitant because they don't control how much they get, or do they? Age. 65% of women above the age of 45 years manage their finances independently. That means older women are financially more independent. Affluence. 58% affluent women tend to have higher financial autonomy versus 38% of semi-affluent ones. Why so? This is due to higher financial literacy and access.
Welcome back. India decides 2024, and it's an extremely tough day. If you're a trader, or you're an investor, you shouldn't be getting too caught up with the big moves in the markets right now. More importantly, the outcome that we're seeing, so far at least, is not a reflection of what we saw in terms of the exit polls. So a bit of an anticlimax in that sense. Well, a quick check on how the index is doing. We're pretty much at the day's low point. On the Nifty, a big cut there, 4% lower. 22,372 is what we have, nearly 4% off the index. It's off the day's low point, but there has been no significant buying that's coming in at this stage. The breadth of the market is exceptionally weak as well. The broader markets are falling in line. PSU index, which is up significantly in trade yesterday, has given up more than it gained in yesterday's trade. Across the Nifty 500 as well, barring a few stocks, most of the counters are trading deeply in negative territory. On the sell side, the list is extensive. If I have to highlight the few big losers on the Nifty 500, you've got PFC that's down 15%. REC is down significantly. That's the advanced decline ratio that you're looking at, and that doesn't look good. Bank Nifty is also seeing a cut of 6%. The tally that so far is on your screen, BJP is at 240, NDA stands at 296, but like you can see, India has been gaining ground in the last couple of minutes. To decipher all this and tell us what it means, the bigger picture, if you're an investor, Prashant Khemka, founder of White Oak Capital, joins in. Mr. Khemka, thank you very much for joining in this morning. This is a tough market to comprehend, to understand, and I guess even more so because the exit polls painted a very different picture to what's turning out to be reality, at least so far. How does one prepare for this? And what I also want to understand from you is, of course, if you're a tactical trader, the situation is very different. But as an investor and on your fund, was White Oak sitting on a cash position before this big event?
So, Samina, to your question of how does one prepare, cash, anyone sitting on cash today would look smart, but would have looked very dumb yesterday. And the only way to prepare for this kind of roller coasters, which can happen anytime, when it was 4 years ago, COVID, sharp fall off, and then a equally or even sharper rise. The best way to prepare for all these is to have a very balanced portfolio at all times. So what we do, as I've often said, we don't lean on any particular theme or any particular set of sectors. Yeah, we have opportunity. You can find opportunities to make money over time in every sector, every industry, every market cap segment. It's best to be broad-based and explore for opportunity across these market cap segments and not across the market segments and the sectors, and not be too focused in a very narrow area. What happens oftentimes with retail investors or retail traders or otherwise also is that they start, following the theme of the day, the flavor of the day, and become very narrowly focused in a small set of sectors, at least disproportionate amount of their portfolio. They might have a large number of different names, and they don't necessarily do all the analytics as much, but most of the portfolio by value gets concentrated into very narrow set of names in very narrow set of industries and sectors, and that then becomes very vulnerable to volatility in the market like we're seeing today. The best way to prepare again would be to have a balanced portfolio across market cap segments and sectors.
You're right, Mr. Khemka, but if there is a fund manager out there who needs to outperform the market, you can't own the market and outperform it, right? You got to take concentrated bets in order to create and generate that alpha to the Nifty, or else one would just buy the index and sit tight.
Certainly. Samina, very good question. I would like to clarify, I didn't mean to buy the index. Yeah, that way nobody can generate outperformance. That's like reducing or eliminating risk, but eliminating all the opportunity to make outsized returns as well. I'm saying make investment decision, or bet is the wrong word, but invest based on your individual company analysis. Take big positions or the sizable positions. I don't completely agree that concentrated bets are necessary, Samina, at least in our case, at least over the decades that I have invested and performance is out there, we do follow a non-concentrated or fairly diversified, or the position size are fairly smaller, but within an industry. So let's say banking is, let's say, 25 to 30% of the benchmark, of the market. You can be 25 to 30% of the portfolio can be banking, and yet you can outperform tremendously by picking the right banks. I'm not saying you be same weights in each bank as the market is or the benchmark is, but you should not. What I'm saying is you can't be zero banking or just 10% in banks when in the market it is 30%, or be 50%. You can be 30% in banks if the market is 30%, and yet can generate very high alpha from superior stock selection or company selection within the sector. And that's what I meant. You can be equal weight in each sector compared to the market, and yet have very outsized outperformance on the basis of superior stock selection.
Right, Mr. Khemka, good afternoon. My question really is to do with the occasion. And of course, at the moment, we do have the outcome of the general election. Keeping that in mind, it does seem like what was expected is unlikely to come through based on the incumbent and the kind of seat share that we're looking at. And of course, there'll be a lot of questions with respect to policy. Policies towards the manufacturing sector, policy towards the services sector. Going in, any risks that you could potentially outlay at the moment, should the government, or rather should the incumbent, not have as much of a seat share as was earlier anticipated?
So if we take the current seat combination as a given, obviously this kind of a seat share in 2014 would have been a very welcome outcome. Today it is taken as a shock by the market, if you see just the market number today, because the expectations were built very high yesterday due to the exit poll results. Even on Friday, this outcome would have been a bit of a dampener, but not as much as the market move today is suggesting. I would say give it today, tomorrow, a couple of days, the market would settle down. And from there on, the market would look forward to corporate earnings, which would be a function of economic growth. As long as policy initiatives, policy making does not change dramatically, which this outcome does not suggest, then I don't see any reason to believe that we are we are at the beginning of a downtrend, or that the market returns should be subdued going forward. Yes. What was the excess built in, I think, over yesterday, that's been taken out, and a little bit of disappointment today. But from tomorrow onwards, or day after tomorrow, once the new government is sworn in, it would be more business as usual, assuming the numbers are what we see at this point in time on your screen.
It's going to be a very tough day, Mr. Khemka, but if I'm going to ask you on behalf of retail investors who probably don't have access to fund managers like yourself, if individuals have been sitting on cash because there has been so much of talk about a price or a time correction, we've withered all those storms in the last 6 to 8 months. From where we stand right now, if there is about 20-30% cash that an individual is sitting on, would you recommend upfronting a significant portion of that in the next day or two?
So, Samina, I've never kept cash personally. Over the last whatever years, I've been investing since mid-80s, 85 to be precise, through the bull markets and through the peaks of the bull markets and the troughs of the bear markets. I've always stayed fully invested, because my belief is it is impossible to time the market. It's not difficult or very difficult to time the market, but it is impossible to time the market. And yet, the market remains the best place to compound your wealth. You can look at today as a intermittent opportunity to buy. It might turn out that you might have even better opportunity down the line. But for me, the best approach has been, and one that I always advocate, even at the crisis time of global financial crisis or COVID, is to stay fully invested. If you have 20-30 in cash, and if you feel very nervous of deploying it all at one time, I would say if I were in that position, and if I were nervous about it, then maybe I won't put it all on one day, but use this opportunity to start deploying and have a certain time frame, or depending on how much insurance or um, uh, how much nervousness you can tolerate, you can deploy them over the next few days or months. But I am not one in favor of cash at any time.
Mr. Khemka, then in that case, let's pivot a little bit more towards allocation. At the moment, or at least until yesterday, there was a suggestion that mid-cap and the small-cap stocks were relatively frothier as compared to the large caps. Large caps had a little bit of catching up to do, but today it does seem like we're seeing a sharp correction across. Now, over the next few days, we're also expecting a little bit of more volatility to come through. And still, if you consider the last 12 months in terms of returns, we will still see a significant outperformance from mid-cap and small caps. Going ahead, where do you see incremental allocation towards?
Certainly, see, again, I can't emphasize enough the importance of keeping a balanced portfolio. Yeah, and over the prior time periods that we've spoken, I've said the same thing, that there are certain pockets in small caps and mid caps that are possibly run away ahead of themselves. It's not necessarily the entire small cap or mid cap. And same way in large caps, there are certain pockets that have trailed more than or certain pockets that have run ahead. Because even in large caps, certain pockets are somewhat at elevated levels, but it's not very broad based. So the important thing is not to get caught up in those narrow pockets, which is where the risk is in most retail portfolios and in some fund management portfolios as well. It is important to not bet on themes. And I repeat, it's not indexing. You can be theme agnostic, you can be market cap agnostic and yet make a lot of money. So it's stock by stock that you must look for opportunities, and yet ensure, in fact, you should ensure that you're present across a wide range of these sectors and themes. And the opportunities are there in banking sector, to your question, Agam. Today, the opportunities are there across almost every sector. Maybe some of the sectors which had, built in a lot of this excess because the extrapolation was made to, perpetuity, as it happens in every bull market. Certain sectors, like in 2007, infrastructure, real estate, and before that, the IT stocks in 2000 bubble. So when certain sectors get extrapolated for decades of a very rosy outlook, then on days like today they get recalibrated. It's important to not find yourself disproportionately exposed to those sectors. Otherwise, there's no particular sector I would advise to be in as of today. I would still say be present across broad range of sectors.
Any sector you don't like, Mr. Khemka?
Samina, at the risk of repetition, there is no top-down view on sectors. We like
it's a bottom-up approach.
Yeah, it's certain sectors that we find less opportunities. So utilities, as an example, we have always tend to find less opportunities. Energy sector, we've always tended to find less opportunities. On the other hand, sectors like banks and consumption and technology and healthcare, and industrials as well, capital goods, industrials, we've always tended to find a lot of bottom-up stock selection opportunity. Now, sometimes these sectors are in favor, other times the sectors are not in favor. And the beauty is we are not excessively exposed to at any one particular sector, because our aim is to identify the best performing banks, identify the best performing industrials. Hypothetically, Samina, if we were good enough to identify the best performing or the better performing or the better half of names, companies in every sector, then we can be mirroring the benchmark and yet do fantastic job in delivering returns. And that's the effort, rather than trying to figure out which sector would do better or worse. But to your point, we are very less exposure to utilities and energy sector.
While you might have had a balanced portfolio, I don't know about your mutual funds, but your PMS has always been a stark outperformer as compared to the index or its peers. But one quick question, of course, this event will be behind us in a few hours from now. FIs that we've talked about so extensively in the last couple of months have pretty much shunned the Indian markets on valuations. And for good enough reasons, some may argue, you've got Hong Kong that trades at 1/3 the valuation that India currently is. What did you make of the earnings season that was behind us? And while India has always been an expensive market, do you feel like the current valuations are justified?
So, Samina, thank you first of all. I wish the performance was as consistent as you suggested, but always that's what we aspire for. On FIIs, obviously, when they see this kind of volatility, that would give them a pause. As of yesterday, obviously, you saw yesterday's figures. FIIs had one of the largest inflow day in a long time, in comparison to any other time, say $800+ million of inflow. And if the outcome today were to be along the lines of exit poll, that is what would have been comfortably expected, that you'll see many such days over the coming few weeks itself. However, with the volatility that we are seeing today, it is possible that the flow pattern in FII remains highly predictable over the next few days. One additional thing, though, I want to point out regarding the last many quarters or years, the outflows that you're seeing from India, I would say we haven't seen outflows as much as no common underlying trend in FII flows. Sometimes it's big outflows, sometimes it's big inflows. The reason for that is more because 80% or somewhere 70 to 80% of the money that's invested in India by FIIs is through regional or multi-regional funds like emerging markets and global funds. Now, emerging markets have been in a soup for last decade. Emerging markets have trailed developed markets. And so there have been massive outflows of emerging markets globally. And so if India is 15 to 20% of emerging markets and say $50 billion flows out of emerging markets globally, because it's a multiple $1 trillion asset class, call it $2 trillion. If 50 billion goes out, that's about 2.5% of the asset class. But out of 50 billion, $7 to $10 billion would flow out of India, even if investors, global investors, which we believe is the case, are adding money to India dedicated mandates. So India dedicated money is coming in, but emerging market and global money going out, and that being a large bucket, becomes like what they call, I guess, fait accompli for India to also see those outflows. I hope that explains, Samina, what has been the cause for outflows in the recent past.
It does. Mr. Khemka, one last question to you. All eyes will now shift to the budget. How important is that event going to be, in your opinion? How important should it be, rather?
Absolutely. Just prior to that, I missed the prior very important question, Samina, that India trades at 3 times the multiple of China. But if you look at historically, not just India, but all democratic countries, this is something, a research that White Oak has done a lot of work on, and surprisingly haven't seen many others do as much or anywhere in that direction. Democratic markets globally have traded at huge premiums to authoritarian markets. India being, as you can see today, the best example of a very well-functioning democracy. India being one, India also has always traded at a substantial premium to other authoritarian regimes, not just China. And China, since you made the specific comparison, over the last few years have in a way reversed course from a country that was moving towards democracy gradually, or expected to move towards a democracy gradually. It has reversed course, and hence China has gotten substantially derated. India has not really gotten re-rated upwards over the last few years, but China has got derated. But that aside, yes, there would be even greater emphasis now on the budget that might have been the case. Let's say, then would have been expected to be the case till last week, because now there would be certain pulls and pressures expected on the government from various quarters. So in that situation, investors would be very keenly watching whether the government would be able to maintain its emphasis on the progressive policies and on the pro-growth growth meaning greater outlay on capital infrastructure, on ease of doing business, and all those emphasis is what investors will be looking very finely for in the budget to come.
Mr. Khemka, such a pleasure talking to you, and of course, thank you for calming all those stressed nerves at this stage who are all very worried about what their portfolios are looking like. It's a tough day. It's a tough day not just for the politicians, but for investors and traders as well. And hopefully we will see you soon, Mr. Khemka. Thank you.
Thank you, sir.
Well, that's Prashant Khemka of White Oak Capital breaking it down for us, telling us that you should be having a balanced portfolio. There are themes and cycles, but a bottom-up approach is what an investor should be having. In the meantime, 22,000 did get tested on the index. 22,100 is where we are at. It's the biggest fall the index has seen in the last 4 years. So the last time you saw this fall was all the way back in 2019 during the COVID era. It is a tough morning. No one's taking that away. The breadth is weak. The bias is very clearly on the downside. The Bank Nifty, which was a big gainer in trade yesterday, is getting it and taking it to the chin as well. But we've got Agam standing by because we usually do this for you in terms of the F&O picture. Agam, yesterday morning, everything looks so different from what it looks this morning. We were talking about levels of 24,000 on the Nifty, 52,000 on Bank Nifty. And now we are threatening 22,000 on the downside.
Yeah, it's certainly a tough one to be in, especially when you are a bull, and especially if you have in fact gone ahead and long in the last hour of trade yesterday. It's been a significant shift in the way things have panned out. And of course, it's not every day that you see 1,000-point cut as far as the Nifty is concerned. And well, about another 4-5% gone on the Bank Nifty. It took a lot of effort for the Bank Nifty to move above and sustain above 50,000, and it just so happens that today we're seeing that come through. And in fact, we're looking at further shorts at the moment. At this very moment, we're looking at shorts. The Bank Nifty has come up by a whopping 7%. When was the last time you saw that? And a lot of selling across the board, a lot of longs getting cut, but a lot of shorts being initiated at this point in time. If we can also very quickly pull up the Nifty futures as well in terms of June. Again, we still have some time to go before we determine, and we have a little bit more clarity with respect to the government. But Nifty now edging towards 22,000, and this was, like Samina said, that yesterday we had 24,000 in our sight, and this is going to be a big shift once again. 22,000 certainly is a very, very strong and crucial psychological, technical support. And should we see the markets break this, where there could just be a little bit more pain as far as the benchmarks go. Again, I reckon that to consider the options market at this point in time would perhaps be irrelevant because of the kind of swings that we're seeing. But we certainly are looking back at the 22,000 and the 22,500 strikes being activated. It's a very, very sharp move, and at this point in time, it's best perhaps not to, perhaps place too much weight on analysis of the options market. But that's how things are panning out, and we're going to have to continue to keep an eye on how things go in forward. Before now, of course, markets continue to be weak, and perhaps it's going to be a wait and watch whether or not we in fact do see a little bit of recovery, but a lot of that will depend on the outcome of the general elections.
It's a bloodbath, Agam. Even the wicks, which we'd have expected to start cooling off today, has actually turned the other way and moved up. 28 and 40% higher on the India VIX. I'm not sure when we saw this last, but those levels are disconcerting. Remember, we've talked about how historically during an event like such as this, the VIX is in the range of 24 and 25. This has completely gone out of whack from the way we see it. 28.73 on the VIX, 38% higher is what we are seeing. So it's getting more and more volatile as we progress through the day. But of course, the day belongs to politics, and that's of course what's driving traders, investors, and the markets. We have NDTV's Uma Sudhir, who's joining us from Hyderabad to tell us what the mood is like. Uma, over to you.
Yes, indeed. Telangana is doing like it was expected to do. Congress and the BJP actually sharing the advantage of the BRS fall in vote share. The both of them seem to be getting 8 seats each, leading in 8 seats each, which will mean doubling of numbers for the BJP from the 4 number that they got in 2019. Andhra Pradesh, much more exciting figure. If in 2019 we spoke about the YSRCP tsunami, this time round it appears like the NDA is running away with it all. And not just that, just the TDP alone is in fact will be certainly able to form the government on its own, and along with the Janasena and the BJP, they are taking it all. Hardly about 20 odd seats that the YSRCP may be able to win in the assembly, and it appears like the TDP plus may be able to get 160 plus here in Andhra Pradesh in the parliament elections as well. The NDA doing much better, getting about 20 seats it looks getting the leads at least in so many. And with the national picture, with the BJP falling short of the numbers, if the Telugu Desam is able to get even those 15 seats in which it is leading now, it could become, in a sense, Chandrababu Naidu once again can aspire to become perhaps a kingmaker. So if the lesson from Andhra Pradesh one has to take is to say that never to dismiss anyone or write off anyone in politics, because less than 8 months ago Chandrababu Naidu was in deep trouble. He was in jail, his party was in very low spirits, and it appeared like you could even write off that party because there were multiple cases that were filed against him. He wasn't getting too much of political support, but all that turned around. Of course, the turning point was Pawan Kalyan going to jail, and almost in cinematic style, the power star that he is called actually announcing that he is going to be fighting along with the Telugu Desam this particular election. He also managed to get in the BJP into the TDP into the NDA once again, and therefore them fighting together seems to have created that kind of wave in Andhra Pradesh, and that's the results that we are seeing. The rest of the south of the country, Tamil Nadu, Kerala and Karnataka seems to be following more or less the patterns that the exit polls had given, with the NDA perhaps being able to open its account in a Kerala in the parliament elections, never won a seat in parliament elections in Kerala, but they seem to be leading as of now in 2 seats. I would reckon they are Thrissur and Thiruvananthapuram, and yes, in Tamil Nadu once again, if they are able to actually open their account in Tamil Nadu and Kerala, it will be a landmark kind of a change in the politics, because this will be the first time that they are in a Tamil Nadu going on their own and on their own steam being able to get a seat there. Means that for the next assembly elections we could actually see tri-cornered contest in both these states, which have otherwise been LDF, UDF on this side and a DMK plus, ADMK plus on the other side.
Uma, you're probably having a very busy and exciting morning in that sense. So many moving parts and so much is changing as we talk about it. And that's, of course, impacting the way the markets are looking. We've breached 22,000 on the downside, 21,880 now. 6% off on the index. The VIX is at 38% higher. I mean, it's a given. The breadth is weak and everything is looking very, very down. It's a bloodbath, to say the least. The last time we saw this was during 2019, during the COVID era. With that, we'll take a break. We'll come back, but you stay tuned because there's a lot more programming on the other side, and things are changing as swiftly as they are. So stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Right, perhaps too much of excitement this morning and this afternoon now, more than the market had expected, anticipated or wanted. I just want to pull up the Nifty before we start. We've cracked below the 22,000 mark and really in free fall and a lot of big names. I mean, HAL down 18 to 20%, the PSU bank index down 16%. That's the Nifty that you're seeing over there. So it's a painful situation. I just want to pull up the heat map before we get into the other set of numbers. Remember, there are two sets of numbers everyone's watching today. One is what's happening on the street, what's happening on the Nifty, Bank Nifty, and the other one is what you can see on the side of my screen, which is where the tally sits right now. I just want to pull up the heat map very quickly before we move ahead and just look at what's working in this market right now. And you have all of your consumer stocks which are really working. That's a defensive play, consumer and pharma. Those are the two sectors which are working, if at all. That's a defensive play. It's also an idea and a sense that the next government will focus more on rural India. That's why HUL, Britannia, Nestle are your first three winners. I mean, and HUL is up 4%, looking like a hero compared to what has happened to the rest of the market. At the bottom line of that chart, you will see everything that has been running non-stop the last 6 months, since December actually, since the state polls. But today on this show, we have a great lineup for you. Alex, take it away, because this is the big one, isn't it?
It is the big one, and we're talking about cuts of about 6%. We've completely erased what we gained at the start of the week, and we've gone far beyond that. Take a look at the Nifty Bank as well, because that's something that the street was cheering yesterday. It crossed the 50,000 mark. In fact, ended, if I'm not mistaken, just shy of the 51,000 mark. And it's now trading at 47,000, just above that, 30 points above the 47,000 mark. And Tamanna pointed out, the PSU banks losing quite a bit of ground. State Bank of India, which was one of the bright spots in trade yesterday, gaining about 9%, is down quite significantly today. It's down as much as 14%. But we've got, as Tamanna pointed out, a great set of voices to take you through this turmoil, this volatility that you're seeing on the screen right now. We've got Gautam Shah, who's joining in. We've also got Swaroop Mohanty of Mirai Asset Investment Managers joining in. In the studio, we've got Aditya Shah, and we've also got Kush Bora. Thank you so much to all of you for taking the time. We will also be joined by Tejas Mehta to give you a sense of the latest political developments as we're seeing on the side of the screen that Tamanna pointed out. That's something that everyone's looking at. Let me go to you first, Tejas, since that's what the entire market is looking at. And I mean, it would be a bit of an understatement to say that the exit polls got it not just a bit wrong, but so far it's not panning out at all. What would you say about that?
Well, the market is an emotional baby, and that's how it reacts. It gets excited too quickly and it gets unhappy too quickly. Not to worry, in 2004 also, when Atal Bihari Vajpayee didn't make form the government, the markets had crashed, but then it did well in the next few years. So in the next 15 days, I think these losses would pan out, and especially in the long term, it really doesn't make a difference. But yes, absolutely right on the exit polls. I mean, it is a little surprising and shocking that so many exit polls who are on a similar trend, at least, and one cannot, of course, no exit poll is perfect, but that direction of closing to, at least most were giving 350 plus. So that not really happening is surprising, and it's much lower. I'd actually kept it for the BJP around 290 to 310, and it's even lower than that. So it's certainly not a great performance by the BJP. And I think while everybody said this was a silent election, this was an election where the voter was not really happy with the government, but there was not real anger on the ground. Yes, we did not hear the anger, but in many different pockets, there were very different reasons for them to really vote. I mean, we thought Ram Temple would really work wonders for the BJP. It was clear it wasn't really. And even in Faizabad, the BJP is lagging, and the SP is really in the front there, leading the election seat. Also, I think inflation had an impact. I don't think in the last couple of months or a year actually.
Right. Tejas, Tamanna here. If I may just come in, and excellent points there. Definitely inflation is one of them. But you talked about Faizabad. I mean, that's the constituency for Ayodhya. where the Ram temple was consecrated. I want to pull up what's happening in Amethi, where as per the leads right now, Smriti Irani is actually trailing in Amethi. Quite a few surprises thrown up in this election. Alex was just pointing out that Thiruvananthapuram, Shashi Tharoor is trailing. We have to find a better word than trailing. Trailing is too simple a word.
Wait, let me just pull up the thesaurus while we're at it. But and it's not a small margin. We were looking at what 19,000 plus votes is the margin that he's trailing with. It's not something that is going to be easy to overturn. Of course, we're very close to the halfway mark.
So absolutely. So the point I was making, and sorry for the digression, Tejas, very quickly. Regional leaders coming to the fore. I mean, for Akhilesh Yadav, this is a coming of age politically, if I may say so. Look at what they've done in Uttar Pradesh, the Samajwadi Party. Chandrababu Naidu back in the saddle in Andhra Pradesh after, 5 years of no one knowing what's happening with him. Nitish Kumar, I mean, people can call him Palturam, whatever it may be, he becomes a very, very important component of the NDA today. Nitish Kumar is politically in the VVIP section of the club. So what Mamata Banerjee holding off in Bengal after so many years. So in a sense, if I were to look for 3-4 headlines for this election, return of regional satraps would be one of them?
Absolutely. And more importantly, if Modi goes ahead to be the Prime Minister, which I think he will, because the BJP is not someone to let go of power easily. They will make a compromise. It's okay for them to be in a coalition government and go ahead. So I think he will be the Prime Minister. But I think we'll see a far more democratic prime minister in that sense. We will see somebody who is not, randomly using the powers of the agencies, because that has not gone down well. And I think, yes, breaking of parties will not happen, as we have seen here in Maharashtra. It has not gone down at all well with the people. I mean, the BJP has, themselves lost a lot of seats. So I think these main three, changes are going to happen. And yes, it's not going to be as smooth sailing, or one may say autocratic a rule as the opposition really put it, because there will be checks and balances internally within the NDA. Chandrababu Naidu making a fantastic comeback. Again, the same mistake that the BJP made of arresting leaders, putting them behind bars, questionable, especially without any proper evidence. Same thing happened with Chandrababu Naidu, where he too went behind bars, and that brought him back into relevancy. So I think a lot of leaders who were written off now making a huge comeback, a big sigh of relief for the BJP making inroads in Orissa and of course in Telangana. I think these are the two shining spots for them. Of course, the Thiruvananthapuram seats indicates, again, that they have made the entry in their final bastion in South India. Kerala was the only one remaining. Of course, Tamil Nadu, we'll have to wait and watch what really happens. So I think we're going to see a lot of changes in governance, a lot of changes in the way this third term of Narendra Modi really pans out, because the numbers are not really what anyone really expected.
Yes, absolutely. Good points that you're making. Thank you so much for joining us at noon to give us the picture of how you're reading things. But I think the long-term investor, of course, is going to get a little bit of a jolt today. And portfolios, while they were very happy at the start of trade today or before the start of trade today, they'll be taking a bit of a beating. Swaroop, we've seen over the last 5 years in particular, so many mutual fund investors entering the fold. What is the message that you would give them today?
So I think today is a big test of their commitment to the long-term story that one has been discussing. Yes, many will be tested today, and people who don't fall for the trap of looking at short-term biases will pay the penalty of getting away of this long-term India story. At the end of the day, the story remains intact. I keep on saying that, as a young Indian, when things changed for me in the mid-80s, when India started liberalizing or this privatization journey, that journey will continue. I mean, some regimes will enhance that journey a bit. Some maybe make that journey a little slow. But there is no denying the fact that this is a one-way traffic. And people who conclude otherwise, like people had concluded yesterday, stand corrected today. And both the stock market as well as politics, the moment you think you know or the moment you think you conclude is when it surprises you. And that's a story which one has to learn today and stick more to their asset allocation than to markets. These are times where the volatilities will start playing out. And I always use my basic statement that in volatility always lies the opportunity. So while some parts might look a little disjointed today, but there are enough parts which will look attractive going forward. Our job as asset managers is to identify 50, 60 stories and give it in the form of portfolio. There is no taking away from that job. There will be 50, 60 what? There'll be 100 good stories in the market, and the portfolio is constructed out of that. The rest is all noise.
Yes. I just want to point out the broader markets. We've been focusing so much on the benchmark Nifty 50, but the real cracks and the real pressure is visible in the broader markets. Right now, you see the mid-cap index, it's down over 8%. You have the small-cap index, the small-cap 250, that's down over 9%. In fact, heading towards sharper cuts there as well. We've got Kush joining in studio. Kush, you were making a point about the VIX. And, what you were doing is you were studying the change in the VIX today as well. Yesterday also we saw a change. But what specifically were you talking about?
Well, the interesting fact is that, there is a very direct correlation between the markets and the VIX, or rather inverse correlation. When the markets fall, the VIX rises. And then that was bound to happen. But there is this also a strong component where when the event is out of the way, the VIX should compress. Now, I know the magnitude by which the markets are falling is quite high, and hence the VIX is, spiking. But a 40% spike on VIX with the event getting done is perhaps a bit much. I think a lot of programs have gone for a toss, and this is where, option selling becomes a lot risky. So you'll have to be a little conscious. Just to bring 1 point to 4, which is 32, 33 is the level from where typically VIX tends to top out in the last few years, except for the 2020 COVID period. So perhaps the VIX is also nearing an uptrend, or rather the up move. So from here on, you could expect further compression, and that could also help the markets recover. Maybe not today, maybe in a day or two, but I think the VIX compression should start to kick in perhaps from tomorrow.
Not by closing session today?
It looks a little difficult because the markets are actually not relenting. You're seeing some bouts of about 50 points. Oh, absolutely.
No, forget relenting. This is a revolt going on in the markets. It's a complete bloodbath. Make no 2 points about it. And can I tell you something? It would have not been so bad if you had a clear mandate on the other side. Yeah. What is and there is this worry. There's this wisdom, or collective wisdom or thought that the markets are only betting for the BJP. It's actually a lack of clarity of mandate that irks the markets the most. So you have no single party
that
has a majority today.
Mark, Tamanna, becomes very important.
It's an alliance. You're back to where you were in 2009. Yeah. 2014 onwards, you've not been seeing this. So yes.
And that's I'll tell you how that's visible in the markets. The markets are hovering around the 20 to 800 mark. You remember we were having that conversation that perhaps from here on markets might stabilize.
Seems so long ago now. It was only 3 hours ago, but yes.
So every couple of or rather every seat that BJP has lost, because at that time the BJP was showing about 250, 251 seats, now settling somewhere close to 235. So every point that BJP has lost, markets are losing about 0.5% to 1%, and that's the exact point that you're also making, that there is no clear majority. Even BJP around 235 is not a great deal, and that's what the markets are really worried about.
Yeah, that's a great chart. Just to intervene that our team has put together. What you're seeing on the orange line is the BJP's seats through the day. And what you're seeing in the blue line is the India line seats through the day, and the white line is the corresponding Nifty fall. Exactly what you were saying.
1,600 points there. Right now. It's painful, right? So the other question is, do you step out and buy if you have conviction? And so far over the last week, we've been talking about several stocks, several sectors that could benefit from policy continuity. Aditya, then the question is, what do you do in this kind of market? Do you wait on the sidelines, or you see such sharp gashes on the screen? Do you step in and buy if you have conviction?
So since the morning, I've been saying that if you get an opportunity, then slowly and steadily you start to add. In my opinion, looking at these numbers, we will get a third term for Modi, but it will not be as strong as the first 2 terms. So to some extent, policy continuity will be there, but there will not be as strong decisions as there were before. So as a result, a lot of PSU stocks are correcting. We've seen PFC, RSC drop by 25%. So what you need to really do is you need to identify good quality companies within the banking space, within the FMCG space, within the chemicals, pharma space, and slowly and steadily try to bet on it. And the moment the market sees that the BJP is going ahead and forming the government, all of these stocks should start to really recover from there on. But the only takeaway from this election result is the policy will not be as strong as it was in the last 2 terms of the BJP.
So there will, when you say as strong, essentially there will be more salah mashwara, or it won't be as quick. Maybe decision making might not be as quick. But the story is not over yet. Gautam Shah is joining us, founder and chief strategist, Goldilocks Premium Research. Gautam, great to speak with you today. It's an interesting day for the markets. I don't know if I should use the word exciting, but interesting and memorable one way or the other. No one's going to forget what they've experienced today on the screen. From here on, we've cracked below 22,000 on the Nifty. Where is the support coming in? Where does the pain end in your view? And we'll of course wait to see what the picture in terms of the results ends up like. But technically, what are you seeing right now?
Well, good afternoon. As they say, don't count your chickens before they hatch. I think as market men, we all did that yesterday, and I think we are paying the price for it today. Honestly, I think political stability at the top was a very important pillar of this entire rally that started from March 2020. And because that pillar is shaking, the market is concerned, and rightfully so. I think we've had a fabulous run in the last couple of years. I think anything and everything was being justified on valuations. The market was indeed overheated, and given the numbers today on the political side, the market is concerned and it needed that consolidation. But you know, I have seen 2004. I remember the time when the market was at lower freeze in 2004. But the key difference between that period and today, in 2004, we were driven by foreign money. In 2024, we are driven by domestic liquidity, and I think that's going to be the real test for the Indian investor, whether it can ride through these political developments. So I think it's too early to say where the supports are, but if you want a number, if you want a bigger number, last December, when the assembly election results were announced and we all celebrated that, the Nifty was somewhere around 20,500 to 20,800. So I do want to believe that in a worst case scenario, that number should hold out. And also from a valuations perspective, we are not really very expensive. And post today, I think we go back to looking at India's own positives. But one thing is very clear, that the easy money making phase is out of the way. I think the returns is going to be far more hard work. You have to stick to top quality. We've had enough chatter around SME stocks and grade C and grade D stocks. I think all of that is out of the window. But if by the end of the day, you know, the current government crosses 272, I would say the market will take it positively, and this would just be an aberration. But anything else would just change the entire dynamics for equity markets in India.
235 right now on the screen for the BJP, but as a collective, the NDA is still holding on to leads in 290 seats. We have to bear that in mind. Gautam, just a quick follow-up, specifically on the Bank Nifty. We were looking at levels of 50,000 plus yesterday. We're cracking quite significantly today. Would you hazard a guess as to where the support is formed right now?
You know, I'm a technician, but I'm not a person who really puts out numbers on a daily basis. I think this is a market where you let things stabilize. You know, when India VIX is at a level of 30, you don't be adventurous, because India VIX typically in the past post-elections have corrected 30-40%. I think after a very long time, you are seeing an India VIX rally 30%, you know, as the verdict is out. So that's not comforting at all. Anything that is high beta and anything that has run up substantially over the last 6 months is correcting. Look at capital goods, look at real estate, look at PSU, look at auto, and obviously the banks. But I would still say that the banks are slightly better placed. And if I want to bet something for the next 2 to 3 years, I would still go out there and buy an HDFC or an ICICI or an SBI, because I think these are companies which are far beyond politics in some sense. So some of these top quality names in the business, HULs of the world, ITC, Reliance Industries, I would go there and recommend also your viewers to commit into them and just stick to top quality.
So back to the basics. Gautam, what about, you know, the frenzy that we've seen in companies owned by the government and driven by government policy? So I'm trying to understand, is this the end of the road for the kind of run-up or excitement we've seen about HAL and you know, some of the railway stocks, some of the defense stocks, your Cochin Shipyard, your SBI? Because there were fundamental reasons for why the street also acknowledged that their balance sheets had cleaned up, they were getting orders, doing well. Some of the results have been very, very good. Just on the charts, would you stay away from this entire pack?
Well, I could be wrong, but I do feel that it's done for now. I think it was very, very overdone over the last 6 months. Please understand the entire PSU space did nothing for a decade. All of these stocks were trading at PEs of 5 and 6 and 7. The re-rating happened 18 months back. In that re-rating, many of these stocks moved up anywhere between 2x to 15x. So I think the re-rating happened to some extent. Everybody in India, everybody on the street started discounting that this is going to continue for the next decade. But please understand, politics in India plays a very important role to what markets do. And we have seen that in the last 20 years. So that's probably the reason I'm staying away from high beta. I'm staying away from all of these stocks, which have delivered great returns. Not to say that they will not come back. All I'm trying to say is that at least for the next 3 to 6 months, they are going to go into hibernation, and you still can pick up certain quality stocks on correction, but not at these levels.
That froth that has been spoken about for some time is very clearly heading for the exit. Swaroop, in the run-up to the elections, there were several conversations about whether or not retail investors were piling too much into the broader end of the market, and that was visible in the kind of flows that we saw. However, at the same time, that SIP number, and I think Gautam also alluded to that fact, domestic flows have been very strong, and that's been led by the mutual fund investor. What if that now not fizzles out, but if it loses a bit of the steam that it has generated, and you see significant redemption pressure in the broader end of the spectrum, small cap and mid cap actively managed funds, how does the industry react and move?
See, Alex, this is not the first time we are seeing a change in the mood of Indian voters, and it will not be the last time too. Yes, it will be a lot of work for us, the market communicators, to go out and talk about the basic story of India being intact. I don't see any reversal in that mood of investors to not participate in the capital markets. Maybe in the short run, we could see 1 or 2 months this way or that way. But like Gautam is saying, once this settles down and one gets to see a visibility of the journey ahead, which will be seen in a very short period of time, I think people will settle down and continue to participate. Now, if somebody does not participate, it's that person's fault to kind of get out of this brilliant story called India. And once this froth settles on this news and not on the froth that you were referring to, a lot of sanity will prevail. Yes, today, like Gautam was saying, today is probably not the great day to be a hero in the market and take some calls. People who did it yesterday would have already been regretting it today. But again, it's very wrong to start off conclude on a day or two or things like that. You also know that between a verdict and government formation in the last 5-10 years have been a lot of difference. So let's see how that space pans out, and let's see how this all falls into place. But what is on display today is something which we have been highlighting for some time now. One is the liquidity of Indian markets, which really got tested today and didn't come out very highly on that scorecard. And the second part is some part of the market was froth, which came out on display. So the portfolios which will look now I think will look far more broad-based, which is good for the future of investing. I think when some pockets of the market become overvalued, it gives a great valuation to the rest of the markets. And that is something which people have to look forward, and that is where
Swaroop, I was listening to you earlier, Tamanna here, and you talked, hi. So you talked about how India will always have, and you guys will always look for the good stories, 60, 100 good stories, and there will be several. Can you name just 3 today that everyone wants to know? I think when you look at today morning, I did a tweet on this itself, and in the morning I said, don't write out consumption, because nobody favored consumption yesterday in the markets. And then today morning I said, don't discount consumption. That's the story to look out for. I think Gautam is talking about private banks. Some of the names he mentioned are solid names, and there are no reason why those names were available at those prices day before yesterday. And if you start looking at the broad base and cut out some of the overgrowing sector which got corrected today, I mean, there was no reason why some of the PSUs were valued where they were, and we were always taking the flak on 2 accounts on our portfolios, because we were not overweight PSUs, we were not overweight dividends, and we did not have small caps. So some of those discipline which we showed in the last 2-3 years probably will play out. We hope they play out, but